We're here on another episode of the Lone Star Capital podcast, of course, with Rob Beardsley, the founder and CEO of the company Lone Star Capital. How are you today?
I'm doing excellent here in the office on a Sunday, but who's counting?
Yes, and I'm in the home away from home here on the Oregon, Central Oregon, actually, as a matter of fact, doing a podcast from Bend, Oregon, my favorite little summer sanctuary away from the desert heat. We apologize for missing last week, but there's been such level of action at the company with you really moving and shaking, and myself personally making moves. We've been struggling to find time to do the podcast. We do apologize for that, but we'll be getting better on a more regular cadence. And we'll also probably have a lot of guests coming up here as we've got our summit event, which let's get right into the housekeeping. Everyone, if you're a limited partner, nice.
You like that?
Yeah, I do. If you're a limited partner investor, if you are a fund manager, capital allocator, or a sponsor, you're going to want to be at our summit event September 15th and 16th. I'm only getting more images of the thank you items we're giving with the cigars, with the lighters, the matchbooks, the whole setup, Carnegie Club. It's going to be really incredible. Do you want to share some additional thoughts there? Because I think you've been really in the weeds with Dasha on this right now, so you're thinking about it a little bit more than you were before.
Yeah, well, I'm spending my time on the most important things, obviously. So I'm focused on the amazing cigar lighters, torch lighters that we will be unveiling and giving out at our summit coming up here. So that's gonna be fun. I'm not really loyal to any particular cigar lighter, but after the summit, you know what I'll be loyal to. I'll be loyal to the Lone Star Capital lighter. That's gonna be a great cigar torch.
Yeah, if you're gonna be loyal to anyone, be loyal to yourself and your company, right? With that said, I actually really do need a cigar lighter because I've been playing a lot of golf while in Oregon. And by the way, my game is solid. I'm probably about a 4 handicap right now. I haven't shot above 80 on this trip. 79, 77, 77, 76, 77 of them rounds. I'm consistent. Neither here nor there. But what I was thinking about actually today was how I needed a torch for my golf bag. So I'll probably steal a couple. And if there's a case of missing cigar lighters, please don't check my luggage. Uh, yeah, with that said, we also have Grand Riviera, which I believe is fully funded at this point, and a deal that we can't talk about, but that deal is actually, I think, fully funded now as well. So we need a deal. But if you're, as those items I mentioned before, an investor or a fund manager or a capital allocator of sorts, reach out to myself if you want to learn more about what we're doing, because frankly, every deal we've done this year has actually been oversubscribed. So there's certainly some equity misnomers out there. There's a ton of cash ready to be placed, ready to go into our deals. So that's very exciting.
Definitely. And that's a testament to your hard work, to everyone's hard work, because it's not easy to raise capital right now. So if we're able to be successful in this environment, it's a match made in heaven, because right now there are better deals to be had. And that is because of a dearth of capital, right? And a dearth of capital affects everyone. So everyone's having a harder time raising money. And if you're able to still raise money, you're able to put two and two together, the great deals and the money. Boom, you've got yourself a good deal and hopefully a great outcome in the next 3 to 5 years.
Well, there's nothing better too in this world, especially from my position, than being oversubscribed on our opportunities. So what we like to do typically is, let's say if we have to raise $10 million for a round number. If we need to raise 10 million, we're going to probably take a couple $1 million chunk of that, call it 3 million for our internal investors, and then we want to subscribe out the rest of the 7. So in the environment right now that we're in, if we're going to raise 10 million, I'm probably internally, depending on the partners we have on this deal, some people perpetually under promise and over deliver and have a constant waiting list. Maybe they do it because they want to be like Rolex and create this extra scarcity in opportunities. Perhaps they do that. That's maybe me just thinking we're in the Baird Oakley green, close to the Rolex green right here. But with that said, it's a really nice position for us to be oversubscribed, but we've had such great partners of late and new people coming into our capital stacks that are really delivering time and time again. So I'm very grateful that we're able to attract partners, but would love for you just briefly to mention the power of being oversubscribed in these capital stacks. As our friend Hunter Thompson says, the best way to raise money is to be oversubscribed.
Yeah, well, I like to say the best way to raise money is to not need it. So the hardest thing to do, unfortunately, is sell or do anything where you're desperate. And it's harder for people who get started, but for people who have been in the business and have experience, it's the best place to be, because once you have that track record and experience and you've got your processes dialed in, then you tend to oversubscribe. And oversubscribing is a signal to everyone that other investors want to invest with you. And to some extent, investors have a herd mentality. It's number one, investors invest to make money. But number two, investors invest to not look stupid. And that's something that people overlook and don't fully understand because yes, it's valuable. It's critical to make good investments and to grow your wealth over time as an investor. But what's almost as critical is when you're at the country club playing golf with your buddies, you're the one bragging about how your investments and how your portfolio is doing well and not talking about, oh man, I did this deal or I bought this stock and it crashed on me. It didn't go well, right? That people do not like to look stupid or to be wrong. And so there's a bias there to invest with what other people are doing. So when people see, oh, that group, everyone wants to invest with them, their deals are great, I won't look foolish if I'm a part of that. So there's a herd mentality, whether right or wrong, associated with investments.
The court of public opinion is probably the most important court to be on the right side of and to get the right verdict on, right? Which is exactly what you're mentioning currently. To that point, it is a tale of your pocket and I guess your investment outcomes depending on how excited you are right now to invest or to not invest. If you're in deals right now that and you're, a consistent alternative, investor, alt investor, right? In multifamily deals, self-storage, whatever you name it, that's not stocks, bonds, and probably your primary residence. It is really kind of talking your own book how excited or not excited people are on the situation with how their investments are going, right? So, for instance, if someone is in a really good place, maybe they've got all their deals distributing, they haven't had a capital call, they're looking and seeing all the signs right now as to why right now is the best time to invest. Conversely, you're going to get confirmation bias if you've had a couple of lemons. Maybe you've got capital called, a deal's not distributing, you're kind of worried about it, you've got 100 grand or so to maybe $500,000 that you're really uncomfortable about. Well, then you're probably saying, oh no, now is not a good time, I don't want to invest, because you have that scarcity mindset. But just realize that the brightest investors are cash heavy right now and are looking to put dollars into it. And to that tune, we've got treasury volatility. It sounds like a recession is imminent, the announcement of it, if you will. We've been in one, but just look at the canary in the coal mine, Warren Buffett. What is he doing right now? He just sold a ton, I believe it was Apple shares. I think he's got, a couple more
Bank of
billion freed
America
up.
as well.
Exactly. So he's got a couple $1 billion that are liquid right now, ready to play. So
240 billion, as a matter of fact.
how much? Sorry,
240.
billion.
It's the most ever he's had.
And he's ready to make plays. So if people like that are doing it, don't get in the way of yourself. These are patterns where alpha is truly created. You get market beta returns when the market's doing well and fine, but this is the time you get outsized returns and a dislocation return on capital for investments made today.
I'll take your point a step further about where people sit today, the two camps, because there's also investors that I've talked to, and I'm sure people you've talked to as well, that say they acknowledge the fact that today is a good time to invest, but they just can't because of their emotions and psychology about recency bias. So we don't have to belabor this point, but even if you logically can look at the situation and go, yes, this deal looks like a good deal because prices come down and there's opportunities and now rates are coming down, so things are hopefully looking really attractive. But even with that logic, it's really hard to overcome the fact that, hey, I just put 200K into a deal and it's heading towards foreclosure, right? It's really hard to ante up and go, well, that just happened, but it's okay. I'm going to double down and invest right now because now's a good time. So it's really difficult to not be a slave to your own psychology.
The other really important item to mention, just with investing generally, not that we're some sort of, Warren Buffett's here, or Charlie Munger, or Sam Zell, but the premise of dollar cost averaging in and also just evaluating risk. I'm going to say this point again and kind of reiterate the point that has been made before from our good friend, Christopher Mendez. If you thought it was risky investing now, it was way riskier investing 2 years ago. So apply that logic today. But on top of that logic that you should be applying there, the other thing to be thinking about is dollar cost averaging. You should probably have a certain amount of capital you allocate at all times. When the market gets super hot, don't get off don't put too many dollars in. Don't get carried away from the zeitgeist and the market timing and stuff. Be really disciplined in all times. When the market's really hot, when it feels the best, it's probably the worst. And when it feels worse, it's probably the best. And you can make an argument that when everything is frothy, probably should be the time that you're actually a little bit more stingy with your dollars and holding it for whatever may come.
Yeah, that's another really good point. There's going to be points in the market where you wish you would have invested more. You go, oh gosh, if only I'd have put in more money into that deal or that time of year or that year. And then there's gonna be other parts of the cycle where you go, wow, I wish I didn't invest quite as much. Or, better yet, different strategy. I think that's the key. And it's difficult to time the market. That's not what we're saying here. But to use another Warren Buffett quote, the market cycle is like sex. It feels the best right before it's over.
We should probably clip that and make sure that's the LinkedIn post that goes on to advertise this podcast on all the channels, right? Yeah.
Yeah, well, I don't want to get Me Too'd and canceled, so we got to be
Yeah, well, you're
careful.
such a salacious guy. You're really living such a controversial lifestyle these days, right?
Correct.
Yeah. Well, one of the reasons why we unfortunately did not record last week is because at the company we're doing something very exciting, something we've kind of mentioned and teased before, but you just experienced and lived through and got to invest with so many employees, other than myself and I think Brad, who were not there. But tell us about the Culture Index experience. Was it everything you hoped for and more? Let it all out.
Yeah, culture index we've talked a good amount about. It's a really exciting thing. Everyone loved it, I would say, and exceeded expectations for everybody, including myself. I would say my expectations were quite high going in, so I don't know if it really exceeded. It just met my expectations, but it was cool to see even a big skeptic like my mom to be won over and go, wow, this is an incredible tool. I don't know how people ran businesses without this. And that's really what it feels like. It's a fundamental shift that you can incorporate into basically everything you do in your company, but really specifically when it comes to hiring, managing, and promoting your team.
So what does this mean for everyone that we have internally? Like, I guess what you found was really interesting, just to make this all about me, because I love to make it always about myself, is that you discovered that I'm actually probably the most perfect person for my, or one as perfect of a person and a fit, I should say, for my role, but also going a step further for my remote ability and remote status moving forward, which was frankly music to my ears naturally. But, what did you learn about myself, yourself, and other employees that we have here?
Yeah, so it's funny, and people can somewhat see my bad handwriting, but as you can see, the top five
Pull it
traits
back
here.
further, maybe, by the way.
Oh, sorry. Yeah, I'm having a hard time here. Well, anyway, it's going to be pretty tough to see all this, but you can see the five traits here at the top are visionary traits, and you're number one, which is a daredevil. And when I first saw that your result came back as a daredevil, I laughed and kind of felt like, ooh, maybe that's not a good thing. That's bad, right? A daredevil is a bad thing. But
Inherently, that sounds slightly negative, right? Not
right.
like the most positive. Like, oh, is this guy a punk of sorts? Is he a sketchy, shady
Can
person?
he be managed? There's a lot of question marks when someone's called a daredevil, but your profile is actually really, really awesome because your daredevil trait or profile is actually a manageable one because it's not a big dramatic one. It's a manageable daredevil, but the the funny thing that and obviously this guy that ran the culture index workshop for us doesn't know anything about you, but he said, yeah, this type of person is great to not be in the office because they're social, they're going to distract other people and themselves, and you're very high autonomy. So you don't need to come into like you don't need someone to be breathing down your neck every day and saying, hey, get out of bed, you need to go work, you need to go work. You're a self-starter. He said, for someone like yourself who has a strong autonomy trait, you need to just manage their outcomes, not their processes. Because if I came to you and said, all right, well, I need you to get up at this time, and then I need you to log into the CRM and take these notes, and then I need to send these follow up emails at this time, and then call down, that's too much structure for you and it's not good. Instead, I just need to come to you and say, hey, you're a self starter, you've got goals. Let's collaborate on your goals so that they can be meshed well together with the company goals, and then that's how you get the most out of someone like yourself. So it's a really great trait. A lot of top salespeople and companies, they seek this daredevil trait, and it's a good thing that it's a visionary trait, which allows you to think macro. So you're not just in the weeds every day, just doing your 9 to 5, right? You're thinking bigger picture, and so you're a macro thinker in that regard. And so the important thing, I'll just finish on this point, is the visionary traits are really important to have in a company because that strong autonomy trait is the gas in the car that makes the company grow and makes it ambitious. And so if you see a company with not enough visionaries, then they're going to not see the opportunities, they're not going to see the risks around the corner, and they're not going to be able to grow. And we have you as a visionary, me as a visionary, Kent as a visionary, and Brad as a visionary. That's 4 visionaries that are in the glue, in the core of the company. So that was really cool to see and learn more about.
So let's talk about then sticking there. Let's talk about just the people that have been on the podcast, just because that's who the audience knows. So let's just stick to Kent. Let's stick to Brad, Dasha, and yourself. Starting with you. What did you learn about yourself that was different? Why is it good for the role currently? How do you think you're going to set things up moving forward to even enhance what we have going on? Because we're also going to do some stuff for myself to enhance me, which is figure out what I do and also kind of offshore some stuff to a VA to be more efficient and to allow me to succeed even further.
Yeah, about myself, I would say that I didn't learn a ton about myself because it was just basically confirming what I already knew. And it's pretty impressive how a 10-minute word survey can just come back and confirm everything about myself. And down the line, everyone's survey felt very accurate to them. Like, I don't think you would dispute with a lot of the things that I have to say about you based on just, as Dave, the culture index guy, would say, a couple of dumb dots, right? So here I can look at a couple of dumb dots and know a lot about you. So it's very interesting. But for me, I think the other interesting part, and everyone got this takeaway, is how valuable it is to know the other person's profile of about whom you're talking to and whom you're working with, because they communicate differently, they perceive the world differently, right? We all experience life through the prism of our own profile. So like me, like we've talked about this before on the podcast, me being a very organized person, I look around the world and I go, how do people who aren't as organized as me get out of bed, right? It doesn't make sense. But you see time and time again how having that low conformity trait, which you have a very low conformity trait, which means, yeah, maybe you don't
Actually
like
makes
the
a lot
dot.
of sense.
You what?
It makes a lot of sense. I mean, I was someone that was like so stubborn. I was willing to make no money and drive Uber on the weekends for my real estate dream to make sense, which is going against the grain entirely. But if you want to, I'd argue go far and go places, you got to do some irregular things.
But that trait, or that thing that you did with Uber as an example, manifested itself via your autonomy trait. You have a strong autonomy trait, and that's actually your leading trait. And anyone who has a leading autonomy trait are considered a visionary profile. So your confidence there, that you said, you know what, I don't care what other people think, I'm willing to work hard now to level up later. That's because you have strong autonomy, which means you don't care what other people think. You have your confidence comes from yourself. So what was really interesting to learn is that there's different confidences that come from different places. So your strong autonomy comes from your self confidence, but other people have, let's say, a leading trait being their social ability, which, funny enough, you're actually, as social of a guy as you are, your leading trait isn't your social ability, it's your autonomy. You're plenty social for sure, but still it's not as much as your A, which is really cool. But I think that's ideal for many people in your position, because, for example, when you go to a conference, you don't get carried away and just want to chit chat with everyone and collect 50 business cards. You still are outcome oriented. When you get to a conference, you go, okay, who are the most important people I need to talk to? And then you go and make it happen. But anyway, the confidences I wanted to cover were, first, the autonomy. Strong autonomy is self confidence. So confidence manifesting from self. But if someone has a leading B trait, they could be very confident because of social confidence. So they have a lot of social confidence. And then finally, the conformity trait. If they have a leading strong conformity trait, then they could have what is considered knowledge confidence. So, for example, my mom has a very strong conformity trait. So she likes controls, she likes rules, she likes policies, she likes everything to be perfectly organized. And so she gets,
She gets confidence then, theoretically, if I'm hearing you correctly. Does she get confidence from success, from doing things correctly, the repetitive tasks, and knowing that she can do them with high level of competency gives her confidence? Is that kind of what you're saying?
yes, her knowledge of a particular topic gives her the confidence to then speak up, because her autonomy naturally is actually below average, right? So she's not like you, strong willed, super self assured. I'm not saying she lacks self confidence, but she doesn't have quite the same self assurance. So where does her confidence come from? It's not from that A, it's actually from the strong conformity trait, or also known as the strong organizational trait.
Very cool. So let's get into Kent. Where was Kent He was the architect, if I'm not mistaken, or was that you?
Enterpriser. Enterpriser, and I'm the architect. So
Okay.
Kent has a pretty unique profile because his most of his traits are fairly in line with the average for the trait, which doesn't mean he's an average person. It just means that he is a chameleon. He can kind of be social when he needs to be. He can be less social. He can be focused. He can be fast. He can be patient. So he has a very balanced personality. But then, what is the most leading trait, of course, is his autonomy, right? His confidence coming from self. He's a self starter. He wants to be in control of his own destiny. He's got a big vision, and he's confident in going after it.
Very cool. And then let's talk about Brad and Dasha.
Okay, so Brad has a unique profile, which he's a philosopher. So philosopher
That
still.
actually makes a lot of sense.
Yeah, let's see based on how you know Brad, see if you agree with these things. And I'm speaking from a perspective of a philosopher trait, not Brad. I mean, obviously I know Brad, but the philosopher has a leading autonomy. So like you and I and Craig, like you and I and Kent, we all have leading autonomy. So Brad is gets confidence from self. He wants to be in control of his own destiny and so forth. The other key factor of a philosopher is he's low social. So I'm not saying he's like antisocial, but he is below average when it comes to social abilities. So
I
what
don't
that
think he needs to be social.
yes, he has less of a need to be social. He is more of a logical thinker. He is a deep thinker. He likes to be alone and think. Not saying he likes to be alone all the time, but you tend to more think out loud and you like to talk through things. But Brad, because he has that low social ability, he wants to think through things more deeply. And
Which is
he,
frankly perfectly for underwriting. And
yes,
the other actually interesting thing about that is underwriting is very nuanced, right? Well, why does a 5-5 cap here make sense, but doesn't make sense elsewhere? Why is this deal the one to go in on and the one to go hard for, as opposed to a different one? So being smart and thoughtful there, and being grounded in that sense, and to reflect as you did at one point when you were doing all the underwriting acquisition side of things, it's very, very impressive skill set to figure out what to buy, because more importantly than what to buy is what not to buy and what to pass on.
yeah, you need patience. And that brings me to the next defining feature of a philosopher, which is a below average pace. So slower than average pace, which might sound bad. Like, oh, that means Brad is slow at his job. No, not necessarily. It just means that his natural state is not to move at a crazy fast pace. He doesn't mind actually being more patient, more laid back, and he can do something over and over again, which is perfect for underwriting because guess what? We look at 500 deals a year. And yes, every deal is unique, but you're looking at deals over and over and over again. So you would not do well by putting someone who has a very fast paced profile into that role because they're always seeking something new. They're always looking for novelty.
So for me, the quality is in the quantity, meaning I'm trying to spray it out as much as possible. A no means nothing to me, is what we've talked about.
Correct.
But for Brad, he wants to kind of look in and then surveil and then snipe and pick and pluck out the right opportunity. It's kind of what I'm hearing when you say that.
Yeah. Yeah. He doesn't mind that. And then I can't remember Brad's precise profile, but the other defining feature of a philosopher is the below average conformity. So less organized, like someone like myself. So that's Brad. And then finally, I'll talk about Dasha, then we can move on. So Dasha has a great profile. Dasha is a coordinator, and we actually have quite a few coordinators in the house. And a coordinator is defined by a low autonomy. So Dasha, again, this sounds bad, but it isn't a bad thing. But Dasha likes to be controlled. She wants clear instructions. She wants to be told what to do. That's perfectly fine. And that's great for a coordinator. That's great for her position.
Well, it makes sense because she really is kind of the office czar of sorts. She kind of spearheads every angle from, doing really important investor relation work to sorting out a lot of the high level projects to coordinating, what's around the corner as well and kind of get everything set up. It sounds like it should be very process orientated is kind of what it would make sense from how I know her, but also with that role and that kind of archetype as well.
Yeah. Well, the coordinator gets those features that you just described from the very high D or the very high conformity, I should say. So just like myself, very organized, likes controls, policies. So Dasha likes to have her ducks in a row, which is perfect for her role. It's an absolute must. And
And
then,
not only is it perfect for her role, but it's perfect for someone like her to wrangle me in. Not that I'm
yes.
really ever, led astray or out there, but for her just to course correct me, or to, if I'm drifting a bit or if I'm getting away from things, it's really good for us to check in between her and you. Is I'm really talking with her now more than talking with you because I am so autonomous, but it's a very solid complementary skill set. So I feel very lucky that it's such a good fit between really the people I work with on my day to day, which is you, Brad, and Dasha.
Yeah, it's very difficult to find someone with a high level of social ability and just a rainmaker salesperson who can back up their sales abilities with organization, which is why most companies don't try to have sales and customer success or fulfillment in the same person, because it's just asking for trouble. So companies do better by pairing up a rock star like yourself with a coordinator like Dasha and balancing those aspects out, rather than trying to come to you and say, "Hey, I know you're a Ferrari, but I'm going to load you up with hundreds of pounds of bureaucracy and CRMs and meetings and things that kind of preclude you from just going at 200 miles an hour." So the two other things of Dasha's profile which make her perfect for her role are she's actually above average social ability, which is perfect for someone who's doing a lot of talking on the phone, handling a lot of relationships with investors, and so on. And then finally, she has a very above average pace. She likes to move at a fast pace. She gets a lot done, and she can do a lot of different things. She's capable of wearing different hats and multitasking.
She juggles. I mean, think about all the juggling she does with two deals right now, an event coming around the corner, another event she's planning in the Bay Area. So not only do we have our summit event, but the Bay Area event and everything else, plus a personal life and whatnot. It's crazy.
Yeah, so good for her. She's got a great profile. Hannah has the same profile. Melissa, our community operations manager, she has a coordinator profile. So yeah, a lot of people in our network have that coordinator profile.
Very cool. So before we talk about Melissa, because I actually want to break that down, because I was wondering who that's someone that's new to the company, so we should give her a shout out and breakdown there. But just briefly, if you could touch on what the workshops actually were that you were doing during the 2 day event, because I actually have no idea. So I'm personally selfishly wanting to know.
Okay, sure. Yeah, I'll tell you. So the workshop was very deliberate, meaning it was starting from the absolute basics. We show up, we're in the office, we got this big workbook, and we start from kind of like a high level, like what this is, what's this for, what do we want to get out of it, and then we dive right into the individual traits, just to get a sense of what these individual traits are. So just as an example, I've been rattling off some of the traits, like A for autonomy. And like I said, higher autonomy is people like you and me. We want to be in control of our destiny. Lower autonomy means more of a team player, more selfless, doesn't mind being told what to do, right? So low A actually is great. Something interesting though is you have to think about the trait that you want for a particular position in the company, right? So if you are managing someone, most often I would argue you probably want them to be low A versus high A, because managing someone like yourself is hard. You have to be good at it, and you have to really know how to work with someone who's high A. Whereas if someone's just naturally compliant, naturally a team player, that's going to be great. But here's where it gets complicated, because what if we're hiring a position that, let's say I'm their boss, but let's say they're the boss of 10 people. Now, do we want them to be low A or high A? Right? You kind of have to make that decision. If they're low A, they'll be a good employee to you, but are they going to be a good boss to those 10 other people? So you got to really sit down and think about this. And so I'm kind of skipping ahead, but towards the end of the workshop, we were actually getting into the brass tacks of, okay, we've got 19 typified traits, and within those traits, there's all of these different nuances. Let's think about exactly for which position we want which archetype. So for community managers, we want a certain profile with certain A and a certain social ability and a certain conformity. And so the next few months, our plan is just to go step by step throughout all the positions in the company, of which there are maybe 20, and create an ideal profile for each position. And that way, whenever we go out and hire for that position, it's actually just such a beautiful process. First step, obviously, is you got to create a job description that describes exactly what that person does. Once you have that job description, then you complete something called a C job, which is in Culture Index online software, where you basically fill out a survey, not about yourself, but about what you think the ideal person traits needs to have for that role. So you fill out that C job for that role, and then it comes back and tells you, okay, this is what we think the ideal profile is. Then you can tweak it, you can make adjustments, and you can test it over time. And then finally, based on those traits, we write a job description. And they advocate not a long job description, but a short job description, something snappy and something that's going to hook in the exact profile of a person that you want for that job. Just to give you an example, if you want someone that is low social, right? Because you want them to be an accountant and you want them to think deeply and all that stuff. Well, then don't write a really wordy, fun, snazzy job post talking about how you get to meet everyone on the team and you get to come to the team parties and you get to meet all these people and do all these people things, right? That's going to not attract the low social, right? And same thing, if you want to attract someone who's super high conformity, really organized, then you want to talk about, like, you might want to write in the job post straight away, like, do your friends call you anal? Are you OCD? If so, like, please give us a call, right? So coming up with a job description that's going to be both drawing the right person in, but also pushing the wrong people away. So that whole chain is what's going to allow us to hire the absolute best people top to bottom. I mean, one place that I'm super excited about this is on the maintenance side, because I guarantee you most companies are not going to this level in attracting the right maintenance people for their properties. And I feel like that's low hanging fruit where we can really outcompete the rest, where a lot of people are hiring maintenance people pretty blind. They look at their resume, they interview them, they ask them what they know, what certifications they have, and then they go for it.
Super fascinating stuff. Well, thank you for that breakdown there. You mentioned someone before, which is Melissa, I believe, right? And you mentioned she's the community manager, organizer, operator.
Community operations manager.
Okay, so community manager, or sorry, say it one more time and what she does, so I can really
Community,
cement this in.
yeah, community operations manager. Don't worry about it. It's just a title that we came up with. She's basically she's someone that helps every community manager at each property with their tenant issues, with just general operations, move-ins, move-outs, fee schedules, rules and procedures, and just kind of being like someone that they can call for help.
A utility player, kind of a platoon person that will just basically help with other resources. I mean, how did you kind of think about this? What was the ideal reasoning for, or I guess what was the reasoning for it? Where does she live? Kind of give the full breakdown here.
Yeah, so the reason why this role is a perfect fit for us is because the radical approach that we're taking to operations is to remove the regional manager layer that the vast majority of property management companies have. And that regional manager serves a very valuable purpose of being that Melissa to their community managers, so that the person sitting in the property's office day in, day out has someone to talk to about, oh, hey, this tenant's complaining about this. How do I deal with that problem? Or, you know what, should I post this move out charge? Or what's the procedure for when, we're transferring someone to another unit and it's our fault? Like, what do I do? Right. So regional managers serve that purpose. And we've removed that regional manager layer because we feel like we'd rather be flatter and more nimble. The problem with being flatter and more nimble is now our asset managers who are here in New York and who are more of like analytical finance types are now dealing with community managers who have these tenant problems, and we're not equipped to help with those issues, right? Because we don't know. We haven't sat in that seat and been a community manager at a property. So basically, Melissa handles that side of what it is to be a regional manager, but across the whole portfolio. And that allows us to be leaner as well, because typically companies might have a regional manager for every 5 to 10 properties, but we're able to have Melissa across soon to be 19 properties because she's only doing a sliver of what is required of a typical regional manager. And then the rest of that job description is being absorbed back by community managers, because we're hiring strong community managers who have that stronger A, who can be leaders and who can do more and don't need to be micromanaged by a regional manager. And then our asset managers are stepping up in a massive way, and they're not just sitting back and crunching numbers and cranking out reports. We've rolled up our sleeves, we're getting our hands dirty and doing the nitty gritty stuff like hiring and firing and helping advise on maintenance issues and putting different processes in place. I mean, we're doing it all. So it is a very dynamic set up for us.
Very cool. And then how will she kind of integrate and work with the asset managers on the team and your mom as well?
So the way that we've been doing it is we've been having policies and procedures workshops twice a week for all the community managers. So we've been getting the community managers all together, which is really great because, like I said, we've had the good fortune of hiring and bringing on some amazing people onto the team that bring 20, 30 years of management experience. And they obviously know a thing or two about being a community manager. So rather than having them siloed, we bring them all together on one Zoom call where they can share best practices, they can share what's working and what's not working, while at the same time, Melissa and my mom, Ina, can implement the policies and procedures, right? Because on the one hand, we want a discussion, we want collaboration, but at the end of the day, if we make a decision, we say we're going to charge fees this way, then it has to be done and it has to be followed, right? So it's a mixture of a workshop, also a mixture of saying, hey, here's what we're putting into place, here's what you guys need to do moving forward. So these policies and procedures workshops have allowed Melissa to quickly kind of introduce things and then follow up one on one. I think moving forward, the asset managers will work closely with Melissa because the portfolio is split up into 3 portfolios under each asset manager. And Melissa can connect with each asset manager perhaps on a weekly call or whenever that call is needed to bring that like a smaller pod of community managers together, like let's say 5 or 6 instead of 15, and they
And maybe
can.
even making it regional depending on the location because real estate is such a regional item. Like let's say there's, the San Antonio people might be with the Dallas people, and then the Houston pocket might be there. It could be the coastal properties we have, or,
Mhm.
Meritage and whatever, or all the exemption properties that we have, right? We could split it up accordingly there.
Yeah, I mean, and that's exactly what I've done. I've thoughtfully chopped up the portfolio and allocated it accordingly, and it's great. We're doing some awesome things.
And with that, I really wanted to get into some of the management updates. Of course, you've had a break from Houston and you've been in New York now for about 10 days. So, if you can share, it'd be really cool to hear. And personally, I haven't heard this. So, once more, it's a selfish request, but let us know about the management updates you've been doing. Obviously, operations, I've read our quarterly reports and move ins, move outs are looking to be in our favor. Collections are looking really solid right now. So, I'd love for you to kind of brag about some of the updates you've made, the changes that have been productive, and kind of how you are feeling about that subject and that side of the business.
Sure, yeah, management is a beast and it's a slow moving animal. So we're not gonna all the things that we're doing, all the effort, it's not necessarily going to pay off overnight, but to your point, it's going to compound and it will show itself over time, which we'll be very excited about. Something that's come to mind that I think is a cool thing to share is about our success with courtesy officers. I feel like the multifamily industry used to place a lot more emphasis on courtesy officers, but then with how hot the market got, I guess property owners and managers preferred to not give policemen rent discounts and would rather just lease out the units and collect more in revenue. But I think that's a miss. I think so. For people that don't know what a courtesy officer is, it's fairly common for a multifamily community to offer a local police officer, let's say a free or discounted apartment at the community in exchange for providing some services to the community, which it could include a certain amount of patrol hours, night patrol, parking their police car in a visible location, talking to some residents, and just being a nice security helping hand at the property. And I think it's super valuable because many of our properties struggle with crime issues just given their location and
And
demographics.
And this is multifamily apartment investing. Unless you're only investing in Class A, opportunities, every property is going to have crime issues. It doesn't really matter where it's going to be. If you stack that many people on top of one another in a condensed area, you're going to have crime. So it's not just subject to us or really anything, or just Texas or Houston specifically. It is a macro kind of ongoing item of the multifamily investing and multifamily business that everyone has to deal with.
Yeah, it's just the nature of the beast. It's just another thing that we need to be good at. And so this courtesy officer thing is something that we're bringing back in a big way. And we've created a new policy for attracting them. And it's been really successful because we've tapped into different networks and talking to certain police officers and then getting plugged into these other groups and also posting on Facebook groups of police officers. So, for example, our loan property in San Antonio called Regency Grove, Uh, we took over a very distressed situation where the previous owner had allowed a lot of criminals to live on site, had a big crime problem at the property, and we've actually gotten 7 courtesy officers to come live on site, which sounds like a lot of free rent that we're giving away, but it's super worth it because nothing is worse for your property's performance and occupancy than people not feeling safe. First and foremost, when you're talking about a successful apartment community, you're talking about safe. It has to be safe or else people don't want to live there.
I
So
would
this is
argue
critical.
safety and whatnot is probably the most important thing to focus on, because with proper safety will lead to more positive Google reviews and just overall positivity and sentiment within the tenants and residents on site there.
Yeah. So we've been very successful with the or the courtesy officers there. And now we're going and basically just systematically, we're not going to have 7 at each property, of course, but we're going to have hopefully at least 1 at each property. And I think it's super worth it. And Brad and I are already baking that into our underwriting on future deals. So any deal that we're underwriting as a future acquisition, we're already accounting for a police officer getting 50% rent discount. So that's a cool initiative that I think is a nice win.
It's a no-brainer. It's also, a nice public benefit that we're doing. Not that it's only out of the kindness of our hearts, but police officers really, you don't like them until you're in trouble and you need someone to help you, right? Well, be appreciative before you actually need them because these people do everyday stuff that is heroic, whether it be, the first person to go there if there's gunshots. So to be able to hopefully provide some kind of amenity or benefit to them is deserved to start with, just on a principle, and then to provide also a benefit that is helpful for us is also really special too. So it makes me really happy to hear that's one of the incremental value improvements that we've done on the management side. But can you dive on to a couple of other points that's also been productive in your time in Houston that you've kind of switched up that you can share?
Yeah, I mean there's so many, but something else that comes to mind is utility billing and billbacks. So kind of a nerdy topic, might not get people too excited, but that's something that we're in the process of. It's still probably going to take another month or two, but there's there's a lot of value because we can save a lot on fees, we can get more efficient, we can more properly bill back depending on the situation. Texas has specific laws, just like I'm sure as every state does, as far as if your water bill, let's just say, is $10,000, you can only bill, if you have an irrigation system, you can only bill back 75% of the water bill times 95%. And then if it doesn't have irrigation, then you can bill 95% of the full bill. So you have to kind of understand these nuances and figure out, well, do I need this irrigation system? How much grass do I have? How much watering am I doing? So something I would like to implement is Wi-Fi sprinklers that can connect to the weather and understand when it's raining so that they're not sprinkling water. Super simple. It's something that we should have definitely had before, but we will get around to doing it now. So there's just like kind of smaller things like that, like converting all of our office phones to VoIP. That's going to save us a ton of, not a ton of money, but it's like no bill is safe. We're just scrutinizing every bill. We're reviewing every contract and figuring out how to do things more efficiently and just make more money.
Well, a lot of this comes back to the implementation of you really putting all of your focus on letting me run on the equity side of things, but having you and your mom scrutinize and look at every single line item. I have to imagine some of that has been principles and practices from your family's experience, your mom and dad's experience of managing some of their properties. Is that correct?
Absolutely. Yeah. I mean, we couldn't be doing half of this stuff without Ina. And also she's spearheading all the accounting stuff. So I'm doing a ton of accounting work and learning a lot about accounting. It's funny because accounting in some ways is more complicated than you think, but in some ways it's a lot simpler than you think too. It's very common sense and you just got to put in the work.
Right. Well, we also have been talking about bringing accounting in house, and it's finally happened. I feel like we've been talking about this since before I got to the company, which is a while ago. It was a natural thing of things. It's like, hey, you eventually get to vertical integrations, you get to in house accounting, when you ultimately level up. But can you break down the importance of accounting, what needed to be done to get to this point, and where the accountant sits? So, talk all about that, please.
Yeah, it's a really exciting place that we're in now and where we're headed because now we've restructured the accounting department. We have 2 accountants that are in the Philippines. So we are able to reduce our accounting costs through that arbitrage, but then also we're getting much better service and we have much better control because my mom Ina can oversee those 2 accountants and we're going to be able to crank out the reports much faster. So there's really not too much to say about it, because accounting is kind of like, when it's working, nobody notices, and when it's not working, it's an emergency, right? And so there's just no excuse. The accounting process has to work, has to be accurate, has to be timely. So I just regret to say that the accounting processes that we previously had in place, or the people that we relied on, such as third-party accounting firms and different employees that did not work out, those things just led us astray and just put us in bad situations where we're doing a lot of cleanup. So we're not just focusing and working on the present, we're working on the past as well, because that's what accounting mainly is it's a historical record. But you can't, first of all, report to investors, which is a critical function of our business, and you can't think about the future without knowing the past, or at least it's more difficult. So that's frustrating for someone like me who wants to move at a fast pace and go look into the future. Like me and you, big autonomy guys, we're always thinking about the future, right? Accountants, they're thinking about the past.
Very autonomous. Yes. Very cool. Well, it seems like this year is really a springboard year. Obviously, we're growing, but we're doing a lot of optimization as well, which will also propel us to help us grow and scale accordingly, which is always very exciting.
I couldn't be more excited about the future. Yeah, we're growing a ton, learning a ton. It's a great time.
So, while we have the last couple minutes here, I know you've got a very important house call coming up here. But where have you eaten when you've been in New York City? Anything fun, and what's on the horizon for next food stops in Houston? We'll end on that note.
Well, it's one thing to work until 1 a.m. in Houston. No offense to Houston, but I'm just sitting in the corporate apartment and just working until midnight or 1 a.m., and there's really no distractions. In New York, that's a little bit more challenging. So, I would say here it's more like stay in the office until about 10 o'clock, which is still good work. We're still putting in the hours. It's still nice.
Burning the
But yeah,
midnight oil while I'm trying to figure out next little projects to do to keep myself busy on the equity side of things because you've trained me so well. We're humming.
I know. Yeah, you have a lot of good support and things are going too well. Hopefully, we can find some more deals so that way we can be busier. But on the operation side, we're still plenty busy. So we're working hard, and it's nice. I don't think it's necessarily to always work till 1 a.m. or even 10 p.m., but that's kind of where we're at right now. But point is, still kind of just working too much to even think about anything. So I did not go to a single restaurant that was worth talking about. Obviously, yesterday my dad and we went to Los Tacos. So Los Tacos number one, shout out. That's the very good Mexican
That's how
spot
I
here in the
know
city.
you wanted Mexican food. You like Los Mariscos, which is also a sister brother company of Los Tacos number one. Yet you couldn't bring yourself over to Hudson Yards.
Not on the weekend. It's just too much of a nightmare over there. It's too busy. So yeah, life is good all in all.
Very cool. And then actually, second to last topic was that last topic. Let's talk about watches for a second. Is there anything you have had your eye on? Has there been any improvements to the family of your collection? What's going on there?
Well, I don't want to reveal the full story, but I am looking to sell one of my Rosegold Aquanot. So don't want to hype it up or put it out too much to the world, but we need to find the right buyer, find the right home for that piece. It's just sitting nice and safely, perfect condition in the safe. Obviously, for everyone listening, I keep all my watches in a bank deposit box. None of my watches are at home, so that is that's on the horizon. Would love to do that, but at the same time, I don't know where the watch market's headed. I don't know if watch market's going up or down. Is it going to
I can't
correlate
imagine
to?
the looming recession and the stock market going into the tubes right now is going to really be accretive for the watch market.
Yeah, one would think that for sure. However, the watch market has been in a recession for over 2 years now. So these things are cyclical. So people, I mean, we've definitely seen the watch market tick back up. There's more activity and there's some stabilizing and some support at today's price levels for the most part. But yeah, I do wonder kind of what's next for the watch market. But I'm not really looking at any sort of big moves here. Just maybe a little trimming to the portfolio. But I'm really enjoying. I haven't had a chance to show it off, but I'm super enjoying my vintage Aquanot that I picked up
The
a few
grenade.
months ago now. Yeah, it's just incredible. I think that if anyone's listening to this and they are somewhat into watches and has a budget of around $50,000, I just feel like that is just one of the best pieces to buy for the money. And I own one, and I'm still thinking like, wow, I would love to buy one, just because I think it's such a good deal. I think it's such a good buy, and they're not going to be around forever because it's approaching vintage age. They came out in 1998, ended I think in 2006. So they're not making any more of them. So
You
get
don't
them
want to
while
be
they're good.
tacky like me for the first big piece, like the 30 to 50 range, and get a gold date.
Hey, we all have to go and flex at some point, right? So you gotta flex. But yeah, the little vintage Aquanot is a special piece. I'm really really enjoying that watch. It's
Excellent.
Yeah. Anyway, could talk about it all day.
Cool. Well, thank you so much for listening. We'll be back at a more regular cadence coming up here. We're just working through summer and obviously a lot of great quality work that we're doing on the operations and capital raising side of things. But fear not, our company is in a better spot than ever before. We're absolutely thrilled about the progress being made, the acquisitions from human capital, but also property level optimizations being really great. But for all the listeners, thank you for being here, and we will see you next week.